way of background, Witan is a global equity investment company run on a multi-manager basis. We currently have 8 outsourced managers who are typically chosen to run concentrated high conviction portfolios that invest in high quality businesses or those whose growth prospects are underappreciated. Witan's portfolio is split into 2 buckets, core and specialist. The core portfolio, which has 6 managers currently, tends to identify global companies which are either large or mid-cap. The specialist portfolio aims to complement the core portfolio. These funds are allocated to managers who have a specialist skill in identifying companies that sit outside the mainstream. So these might be emerging markets or a climate change strategy, or indeed an investment through investment companies into areas such as listed private equity, commodities, biotechnology, or real estate. This gives Witan a very diverse portfolio, which is currently made up of approximately 250 companies and 12 specialist funds. It's spread across approximately 60 industries and 30 countries. The country allocation of Witan's portfolio hasn't changed very much over the last year or so. Approximately 40% of our assets is invested in the US market, with about 20% in the UK and nearly 20% in Europe. The rest of the assets are spread across countries across the rest of the world. Approximately 12% of our assets is invested in investment companies, which, while domiciled in the UK, might well be invested overseas. Sector allocation similarly has not changed significantly over the last year or so. The main industries around the world are represented in Witan's portfolio. These include industrials, information technology, healthcare, consumer staples and consumer discretionary products, communication services, and materials. There's a smaller allocation to energy, utilities, and real estate. It's important to note, however, that this is not predetermined. Our managers select stocks for their individual attributes, so the portfolio is built from the bottom up and can vary over time and indeed be quite different from the benchmark. "2022, a bit like 2021, has been impacted by a series of extraordinary events, some of which, of course, are connected. We're still experiencing COVID, although thankfully this is waning, but its impact on global supply chains continues to be negative. COVID support packages pushed up inflation towards the end of last year and indeed into the beginning of this year, and Russia's invasion of Ukraine has exacerbated this. This invasion and the extreme weather events that we've experienced across the world have led to negative financial and humanitarian impacts, including hitting global food production and, of course, energy prices. Therefore, equity markets were very volatile through the first half and indeed to the end of August 2022, having fallen in excess of 20% at points. We have enjoyed somewhat of a recovery, and at the end of August, Witan's NAV was down 7.7% versus a decline of 3.5% for Witan's benchmark. Gearing, while a long-term contributor to performance, was a short-term detractor from performance in 2022. The worst affected sector were clearly technology companies, and those specifically pre-profit technology companies, which were very highly rated going into the beginning of the year. The only sector really to outperform by any significant margin was energy, which was up over 40% over the first 8 months of 2022. More defensive sectors also performed relatively well, but those sectors include consumer services, healthcare, and utilities. Other sectors were all negative. Thankfully, Witan's revenue has continued to recover from the COVID lows experienced in 2020. Revenue earnings per share in the first half of 2022 was up 39% versus the same period in 2021. It is the board's commitment to continue to grow dividends annually so that shareholders enjoy a growing yield over time. There is, of course, a revenue reserve as well, which helps support this policy. We haven't made many changes to the portfolio during 2022, and those that we have made should be characterised as a gentle nudge to the tiller rather than a wholesale change in direction. We added to our highest growth manager, Jennison, and that was funded by reducing exposure to a couple of our larger managers. Within manager portfolios, they've identified energy as a key short-term opportunity and increased exposure there. They've also increased exposure to healthcare, staples, and reduced exposure to information technology and communication services. Within our specialist portfolio, we initially trimmed our exposure to GMO global climate change strategy, which had performed exceptionally well, and we decided to take a little bit of profit. Subsequent to that, we added back to the strategy after a period of weakness. We also trimmed exposure to 3 holdings which benefited from the environment early in 2022, where cyclical companies outperformed. So Apax Global Alpha, BlackRock World Mining, and Schroeder Real Estate were all trimmed. We added exposure to a Global Sustainable Energy Opportunities Fund and bought into an ETF which gives us exposure to American biotechnology businesses. A sustainable business to Witan is one which has sustainable cash flows and a long-term future. Companies which are honestly and competently managed and in compliance with both the relevant regulations and social expectations. Companies which don't follow these rules are increasingly likely to suffer tighter regulation and lose the social license to operate, which means they will suffer declining revenues over time. This is not an exclusion policy. We do not want to limit our shareholders from an evolving opportunity set and their ability to influence change and benefit financially from it. We work with our managers, who in turn work with our portfolio companies to ensure that all companies are on a sustainable trajectory. Benefit comes from improvement, not from necessarily avoiding specific companies in specific sectors. While some of the issues that have impacted global equity markets through 2021 and 2022 are also key themes that we're focusing on in the long run. If you think about COVID, supply chains, inflation, extreme weather associated with climate change, and indeed Russia's invasion of Ukraine, all of these have affected the health, wealth, and indeed happiness of the global population. So if you were to boil it down into one word, it would probably be security. That's energy security, geopolitical security, and securing both the future health for the planet and its people. Thinking about the way that we express these themes within the portfolio, our managers are buying into renewable energy companies, but they also see opportunities in materials businesses and infrastructure, which is required to build out the new green renewable energy grid. Investment in railways is replacing trucking in North America. Oil companies which behave responsibly are being favoured over those that don't. Indeed, companies such as BP and Shell have made real commitments to invest in renewable energy technologies and to cut their carbon emissions over time. We believe that these sorts of companies will benefit financially over the long run.